Happy Friday. Brian Manning here with the weekly update. Super excited to be back here, back from vacation. Happy New Year, everybody. Let's get to it. So Monday of this week was relatively quiet with the exception of we had two Fed members speaking. We had Lori Logan, she's the Dallas Fed president. We had Michelle Bowman talking. Both have actually been very hawkish in their comments. The Federal Reserve has been just very hawkish in general until Jerome Powell's speech in December, when he really moved from hawkish to dovish and leading into information of inflation becoming a reasonable number and moving in the right direction. So then we have Michelle Bowman talking, who's normally been very hawkish as well. And she kind of said that her thought process has evolved on inflation. Just, no Fed member is going to come out right now and just say, we've won the game, we're going to start dropping interest rates. Because if they do that, the markets will rally, it'll be a huge problem. So they're going to slowly move from hawkish to dovish, but we're seeing more and more Fed members talk about inflation easing. In fact, it's kind of like a sports book. There's odds on when the Federal Reserve is going to start lowering interest rates at their meetings, and 94% of investors think the Federal Reserve is going to start lowering rates in March. So there's a huge amount of people that anticipate Fed rate reductions in the month of March. This is exciting to see. Everyone's waiting for this, and I'll be happy to see it as well. Tuesday this week, relatively quiet news and not a lot to talk about there. Wednesdays, we've got CoreLogic. So CoreLogic gives us feedback on housing. This is for the month of November. On a month-over-month basis, housing was up 0.2% across the country as far as appreciation is concerned. On a year-over-year basis, housing was up 5.2%. Everyone thought the housing market was going to crash. Rates went up. 2023 is going to be horrible. I'm just going to sit around. I'm going to wait to buy a house until the market plummets. Market hasn't plummeted. Now we see rates coming down. If you haven't bought a house moving in the spring, I'm telling you, it's going to be crazy. Here we are, consistent appreciation, 5.2% year over year from the month of November. So still really solid to see. Thursday this week, we get CPI. So CPI stands for Consumer Price Index. So there's two measures of inflation that we get every single month. There's the CPI and there's the PCE. PCE is the personal consumption expenditure. Technically, the PCE is the Federal Reserve's favorite gauge for measuring inflation, but we look at the CPI as well because CPI includes items like out-of-pocket medical expenses and housing, which I think is really important to look at for inflation. So CPI for the month of December, the headline number was up 0.3%. That was a really good number. It was, a lot of people thought it would only be up 0.2%, so it was up 1/10 higher than expected. The core rate for CPI moved from 4% down to 3.9. So we're still seeing gradual improvements in inflation. Again, we've talked about this so many times in the past. One of the biggest components of inflation, in fact, 42 to 43% of this report is going to be shelter. Shelter makes up a huge number. It's a lagging number by like 12 to 16 months. We're still seeing shelter costs come down, which means we're going to continue to see inflation moving lower. Then today, we got PPI. So PPI is the producer price index. This measures inflation at a wholesale level. This is actually kind of a shocking report. Expectations for the month of December was that PPI would be up 0.1%. Instead of being up 0.1%, PPI was down 0.1%. So it was really good. That showed better inflation movement than was expected. And on a year-over-year basis, this is at a very low 0.8%. The reason why this is important is because a lot of people think, well, if wholesale inflation is increasing at a slower number, potentially wholesale cost inflation increasing at a lower number will then translate over to retail costs for us as consumers. So when you see inflation coming down on the wholesale side, that usually translates to inflation coming down on the retail side. Again, mortgage rates like to see inflation moving lower. As inflation keeps coming down, mortgage rates keep coming down. I'm telling you, spring's going to be insane. If you haven't bought a house and you want to buy a house, you better put the gloves on for spring because it's going to be crazy. Mortgage rates are dropping right now. Just to give you an example, we saw their peak in the end of mid to end of October. We've seen them come down about 1.5% from October through today. That's a huge drop. You're going to continue to see mortgage rates move lower. We're super excited. I'm around all weekend. If you want to learn how we're closing a purchase transaction in 14 days, let me know. If you're a realtor, we can't wait to see you at pitch January 23rd. Happy Friday. Have a great day.